Hello traders, welcome back to the Forex Gig, where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we're going to be talking about the linear regression in the Forex trading. This powerful statistical technique can help you identify trends, spot potential reversals, and make more informed trading decisions. The linear regression is a valuable tool that many successful traders use to gain an edge in the market. So by the end of this video, you would understand what the linear regression is, how to apply it to the Forex trading, whether you are a beginner or an experienced trader looking to refine your strategies. This information will be valuable for your trading journey, so stay tuned to understand. So let's get started as we unlock the potentials of the linear regression trading. Now we ask ourselves, what is linear regression in Forex trading? And I put it to you that the linear regression is in Forex trading is a powerful statistical tool that can help you identify and analyze trends in the current market. And its core, the linear regression attempts to find the best fitting straight line through a set of data points. In this case, price data over time, and this is the regression over here. This line represents the overall trend in the market, giving you a clear visualization representing the direction price is moving in. This is basically the line. When applied to the Forex trading, the linear regression typically involves plotting a line that best fits the price data of the current pair over a specific period. As you can see, this line is often called the linear regression line or the trend line, and it serves as the backbone of the linear regression channel. As you can see, if you do not know how to draw the line, I will draw it again so that we will understand. We will draw it when we see a series of price making higher highs and higher lows in a straight line. We can just pull our line chart and draw it across. This is exactly how you draw it, and automatically it plots the channels. Now, as you can see in the chart, the linear regression line cuts through price action, showing the average pathways of price movements. This line can help you quickly identify whether the market is in an uptrend or is in a downtrend or is in a sideways moving market. But the linear regression in Forex doesn't stop at just one line. Many traders use what is known as the linear regression channel, which is these lines. This is the channel over here, which consists of three lines. The first line in the center, the one at the border, the upper border, and the one at the lower border. The regression line is in the middle, do not forget, and it also have two parallel lines above and below. These outer lines typically represent one or two standard deviation from the center line, creating a channel that comprises most of the price action. As we can see, this channel gives you valuable information about potential support and resistance levels. When price approaches the upper band, it might indicate overbought conditions, suggesting potential reversal or pullback. Conversely, when price approaches the lower band, it signals oversold condition and a potential buying opportunity. One of the key advantages of the linear regression is Forex trading is the ability to help you see the bigger picture of the market trend. By smoothing out the short-term price fluctuation, it allows you to focus on overall direction of the market, which can be particularly useful for long-term trading strategy. Moreover, the slope of the linear regression line provides insight into the strength of the trend, and as we can see, it's indicated by the color. The red side would show that we are in selling region, and the blue side will show that we are in the buying region. Remember, the linear regression can be a powerful tool for forex trading in your arsenal. It is most effective when used in conjunction with other technical indicators and fundamental analysis. No single indicator can predict market movement. Bear that in mind. There is no single indicator in this world that can predict market movement with certainty. But by understanding and properly applying linear regression, you can gain valuable insight to inform your trading decision. Now let's look at a step-by-step guide on how to trade forex using the linear regression channel. Let's see how we can apply this to a trading strategy. So forex trading using the linear regression, you need to approach the leverage. You need to approach leveraging this tool ability to find trends, support and resistance level as we have marked out on our chart. We have to break down this into actionable steps so that you can implement this strategy effectively. We first start by identifying the trend, and as we can see, we have identified the trend in the market. Overall trend here is a bullish trend. As we can see, market is creating a series of higher highs, higher lows, higher highs. So we would apply this linear regression on our chart. This is when we apply this to our chart. Remember, the slope in the middle line is upward. If the slope in the middle line is upward, it indicates an uptrend, and if it's downward, it is implicating a downtrend. These simple steps help you to align your trade with the market's direction. So once we have identified the trend, we look for trading opportunities based on the price interaction with the channels. For example, if price touches or falls below the lower boundaries, as you can see in this area, when price fell below the lower boundaries, this area here, it signals buying opportunity. If we have bought in this area, we have reading the market to the upside. Conversely, if price touches the up or rises above the upper boundaries in a downtrend, it indicates selling opportunity. Now let's look for a downtrend channel. Now looking for a downtrend, we'll go to another chart and we'll plot this, our indicator, on this chart. And as we can see, this is a linear regression in a downtrend. It helps us spot that the direction of the market is to the downside. And remember, when price rise and touches the upper level in a downtrend, this might indicate selling opportunities. When it touches the upper region in a downtrend, it indicates selling opportunities. These points often act as zones where price reverse or corrections occur. Next, we have to consider breakout. And if price breaks above an upper channel in an uptrend, this indicates strong buying pressure. And when price breaks below in a downtrend, this indicates strong selling pressure. However, we have to wait for confirmation before entering any trade. In this case, in a downtrend, price broke above, and as we can see, it continued to the upside. This is a proper reversal. While in this area, price broke below before coming back up to continue the trend in the market. Now, to manage your risks effectively, you have to always set a stop loss. For a buying trade, you place your stop loss below the lower boundaries in the channel. So let's see how we can execute this. At this area in the market, when we notice price has come to our lower region, after price has gotten to our lower region, we will decide to enter the trade, and we can combine this our strategy with other indicators. An indicator we can combine this with is called the RSI, the relative strength index. This indicator would help us to spot overbought and oversold conditions in the market. Now, if the RSI, which is this indicator which spots overbought and oversold conditions in the market, if this RSI is below 30 when the price touches the lower boundary of an uptrend, remember, when the indicator is below 30, and as we can see in this area is below 30, and it is at the lower area of our line regression channel, as we can see, and it is below 30 in this area, as you can see, it is below 30. It is confirming that we can buy in this area. It is strengthening our buy signal because it's showing that market has been in an oversold region. Now, when price touches the upper part of our boundary, like in this area, when price touch the upper part of our boundary, and we check our RSI and we see that it is above 70, and as we can see in this area it is above 70, meaning look at from this area here, look at the reading, it is at 75. At this area, it signals that price is in an overbought region, and it reinforces our selling signal, meaning that we can sell from this area because we are about to experience a decline in price. So remember, when we are trying to take a trade from the lower boundary of our linear regression channel, we will enter the trade when we confirm from the RSI that it is in an oversold region and it is below 30. As we can see, it is below 30. When we spot that it's below 30, we enter the trade at the lower end. You can wait for a candlestick pattern, a bullish candlestick confirmation. Then don't forget to put your stop loss. Your stop loss must be placed just below the lower boundaries of the linear regression channel. Then you can ride the trend to the center of your linear line, or we can aim for 1:2 or 1:3 as the case may be. Conversely, if we want to take a selling trade and we have confirmed from our linear regression channel, that price has gotten to the upper region of the channel, and we confirm our RSI is at an overbought region which is above 70 and above, we will look for our bearish signal before entering the trade. We put our stop loss just above the linear upper boundary line, just to give our trade breathing space. Then we can aim for the center line, the linear line in the middle, or we can aim for 1:2, 1:3 as the case may be. By following this step and incorporating a proper risk management, You can use the linear regression as a powerful tool to enhance your trading strategy and make more informed trading decisions. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on your notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.